Welcome back to Talking Stocks. My name is Joe, and I'm here with Todd. How are you doing, Todd?
Hey Joe, happy holidays, my man. It's
Yes, same to you.
Great to be with you during this holiday week, and just best wishes to all the listeners out there. Hope you have a safe and happy and healthy holiday. As you can see,
Absolutely.
Joe, I'm rocking my red in
You're
honor of
rocking your
Christmas this
red.
week.
I've
I
got
got the
my
beard.
beautiful festive background behind me. I don't know if you can see this, but it's one of the most beautiful mountain views you'll find anywhere.
Oh man, I
Up in the
tell you, the
White
White
Mountains of New
Mountains.
Hampshire.
Oh, geez, I tell you, Joe, I tell you, and you were talking before the beginning of the show that you actually, you got up on your skis. There's a little bit of snow there, huh?
A little bit, yeah, enough to get out and get my legs underneath me. So yeah, it's been a good couple days.
Yeah, we haven't gotten a tremendous amount of snow down here on the seacoast, as you know, but hopefully there's enough on those trails so that you're not scuffing off the skis too much. You have to wax them or not, you know.
That's right. We sure hope so. So there's a lot that before we started recording, we were like, oh my gosh, there's so much. It's the total opposite of last week as far as news goes. We could have 2 hours of content this week. So we kind of had to pick and choose what we want to talk about. So I think we should start with talking about two stocks this week, or in the past week or so, I guess, that I've kind of noticed are moving in an interesting way. You wouldn't really expect it. So the first is Moderna, and the second is Tesla. And they're both essentially doing the same thing. They're trending downward on what you would think would be very positive news. And so I'd love to hear, you can start with whichever one you want, if you'd rather start with Moderna or Tesla, and just kind of like walk us through why you think, or why you know that they're trending downward on such great news.
Well, as you know, Joe, I'm a big believer in planning your trades and trading your plans, right?
Absolutely.
And one of the things that has to go into planning ahead, proactively setting up what your strategy is going to be with particular stocks, is remembering that, there's a reason that there's that saying, buy the rumor, sell the news. And I think that that's what we're seeing here play out, because it's not even just Moderna, it's also Pfizer. And I'll pull up charts of these in a second.
Yep.
But you have Moderna and Pfizer both securing emergency use authorizations. You've got the first people who are being vaccinated. Theoretically, everybody is getting one step closer, right, to being able to get that vaccine, and that's dollars and cents in shareholders' pockets, theoretically, in the form of these contracts that the companies have inked with governments, including the United States government. And I think one of the things you're seeing in the sell-off is that, okay, well, the uncertainty was whether or not they would actually get approved, right?
Right.
So it was an uncertain outcome. So people were rallying up the stock ahead of that uncertain outcome, right? And one of the things that's already known is, how much these deals are worth, right? Because they already had cut these deals to be able to provide the vaccines to these countries. And we already know that, how much those deals are worth. So once the certainty of the authorization came through, I think that was basically the catalyst for a lot of people to say, okay, well, that was fun. And, until there's some more uncertainty for me to go out ahead of, where I can buy that rumor, I'm going to stay on the sidelines. And I'll just show, I'm going to pull up. So, listeners, we do post these on YouTube so that you can see the charts that we pull up. Again, every week we'll try to do our best to walk you through what we're looking at. The first chart that I have up here, Joe, and just give me a thumbs up if you can see it.
Yep.
Fantastic. It's Pfizer. And you can see that, Pfizer had this really nice rally, fell back to the 200, held that 200-day support, rallied right back off of it on accelerating volume, actually eclipsed that prior high from November and got up to about 43. And then sure enough, they got the emergency use authorization, and it's been a downhill. I don't know if you'd want to ski that slope, Joe. That might be a double black diamond drop.
Yeah, that's pretty precipitous.
Yeah, you certainly wouldn't want that trail to be icy, but that's a 43 to about 37
Mm-hmm.
on the drop. And again, now holding around that 200-day moving average. So obviously a very painful reminder to the person who went out and bought it at 43 the day before, or whatever the announcement of the of authorization, that selling the news is a real thing. And if you look at Moderna, and I'll pull that chart up, you also see the similar. Maybe a little bit more manageable of a slope, but still a pretty steep slope that I don't know if I'd especially this part right here. That's a big drop. And you see that big drop off in Moderna, where it's working out that excess and possibly, you know, getting down to a level that might be actionable. I think on both those stocks of the two, Pfizer might be more actionable because it's right about at the 200-day moving average. You can kind of define your risk there if you want to keep your losses small. The thinking, though, would have to be, Joe, that your expectation is what? Two things, right? The risk now may not be toward a bullish event. It could be towards a bearish event.
Right.
So, for example, we start hearing safety problems, you know, this anaphylactic shock. You're going to see one or two of those, you know, that's just, and sadly it happens. Those things happen.
Yep.
And of course, that'll get widely reported as if it's much more common event than it is, right? So you have these kind of safety signals that could be weighing on these stocks as well. But so of the two, probably Moderna with more risk down towards, I would personally, I'd be looking at it more down towards this pivot level of 100 on a retest of that. So a little bit more pain there. And then with Pfizer, maybe you could take a swing at Pfizer here. The other thing about Pfizer, obviously, is it's a much larger company with a lot of other revenue drivers. So Moderna is your pure play in the vaccine space, right? So again, buy the rumor, sell the news, and now you're having to model for what is the uncertainty. Maybe the uncertainty isn't towards a bullish event. Maybe the uncertainty is towards a more bearish event.
All right. So what about Tesla? Because obviously very different news, very different company, but similar movement after its admission, you might say, or entrance into the S&P 500 this week. Although the chart does look very different from the two we were just looking at.
Right. So far, so good. It's holding the 21-day moving average, which is this green line on my chart. It hasn't broken through that where Moderna and Pfizer have, but it shouldn't be lost on investors. I'm sure it isn't that, you know, the day before the inclusion, Friday, you had this huge rally up in the stock and, you know, where would we get up to 695? Wow. And then, you know, we pulled back and I think we were trading, got as low as like maybe 610, 615, something like that, in a couple trading days after that happened. I think we had Joe, I think they were modeling for something like $85 billion worth of buying that needed to happen by passive investors to get the exposure that they needed to the S&P 500 weight. And I think that if memory serves me correct, don't, you know, I could be a little bit off on this, but I think it was like 130 billion that actually traded hands ahead. So you have to wonder if some of that was just, again, the gamesmanship that you tend to see from the short-term type players who, you know, bought that on the news of it, on the rumor of it getting included, and then finally, once it was included, sold it. And then you also had an interesting development this week where you had maybe some of that EV money that had been made in playing Tesla, maybe rotate slightly towards a potential new competitor.
Right. Great segue there. I almost missed it. So earlier this week, Apple announced that they're rebooting, if you will, no pun intended, their what are we calling it? Their car venture, their autonomous vehicle project. I don't know. What are they calling it?
Yeah, it seems like we get this news every once in a while out of Apple, right? It's almost like everybody forgets about the fact that maybe they have their design set on some sort of a vehicle program, and then
they love to churn up that rumor mill, don't they?
Yeah, and oh my God, there's so much to talk about on this subject alone, but we'll try to nutshell it for you. But yeah, so the discussion now is whether or not Apple will be able to challenge, you know, with its own electric vehicle, And I think the year that they were hoping to try and have something that would be available was 2025 or something like that. So you're still talking, a good 4 or 5 years away from being able to have that delivered. And at that point, you're going to have GM out there, you're going to have Ford out there, you're going to have Tesla obviously still building momentum off of that. But nonetheless, I mean, that's still a major player, and Apple has a history of successfully innovating consumer products, right? I mean,
Right.
to take something that some people have already done and then produce something that's better or resonates more with the marketplace. They weren't the first person to come up with the idea of an MP3 player, right? They weren't the first person to come up with the idea of a smartphone or a cell phone.
That's right.
They kind of perfect.
Exactly. I was about to say it's safe to say that they have a way of kind of doing it better, if you will, taking something that exists in one form and improving it into this sleek and almost beautiful machine. And so a lot of, myself included, I'm somewhat interested in cars, and so it's really compelling to see the most valuable company in the world try to get into this space where they've been so good at design and innovation, because you're like the sky's the limit, really.
Right. And really, user experience is going to become it's going to change. User experience is going to change a lot when it comes to transportation
Oh yeah.
once autonomy comes out, because now you're talking about mobile living rooms. You're
Mm-hmm.
not talking about having to engage necessarily with driving on the road. You're a passenger and the car is taking you somewhere. So you're going to have more relaxed environments that are probably going to be very tech heavy, very entertainment friendly.
Yep.
Eventually. And I'm sure that that's not lost on Apple. And you can see on the chart here that Apple, unlike Tesla, where Tesla comes falling this week, Apple had a very nice pop this week on that news. And I think it's for exactly what we're talking about, is recognizing that, wow, this is, EVs only represent a very small, like single digit percentage of total vehicle sales. So this
Yep.
is still this might be batting practice. Not even, the game hasn't even started yet when it comes to EVs. So there's plenty of time still for Apple to get involved in this and be able to, get exposure to this category, and obviously juice up revenue and earnings and everything. I think a lot of people are getting excited about that because they want to see more news. What's the one more thing? And again, that uncertainty or that rumor that they were going to be able to enter into the space is kind of driving the stock up higher. I kind of like it here. I think that this is a stock you can actually add to portfolios in and around this level. And I really do like, you get this dried up volume as it's basing out sideways. That's actually a very good sign. It's basing out. You don't really have a lot of volume. There's not a lot of sell pressure, not a lot of people weak hands getting out of it. And then you have this acceleration of volume as it's starting to move up and challenge those old highs from August. And I think one of the other things that, Joe, that jumped out at me as I was going through the research this week and just trying to find different stocks that are popping up in the large and mid and small cap best and worst rankings that we put out every week. And link below to a free trial, by the way. If you want to get a free trial to see those reports, go ahead and
I'll pop it in the show notes.
Fantastic, Joe. But you look at that and you say to yourself, okay, well, what other stocks might benefit? And, I think you have to look at the supply chain, right? Apple's supply chain. How might some of those stocks in Apple's supply chain benefit? And one of the stocks that scores well for us that is involved and could be involved in some kind of a project like this would be Lumentum Holdings. And I own this one personally myself. Symbol there is LITE. And they do, Joe, they do like 3D sensing. So, help to understand the environment around the device.
Yep.
So if you are unlocking your phone, with your face, they also are involved in LiDAR, which is something that's going to be very important for autonomous vehicles, again, to understand the space that's around them. So Lumentum obviously breaking out to all-time highs this week on that news and the optimism that maybe it might play a role in the future. And then the other one that supplies into Apple that could benefit, that works in a very similar space, I think they might actually be competitors with Lumentum, but also work with Apple, is IIVI. IIVI Incorporated, symbol there, IIVI. And that's another one that's been rallying very strong. And geez, wow, you got to love that volume, the by-day volume, and really not anything down here as far as red days.
That's a beautiful upward trend there too.
Yeah, yeah. I mean, at some point, maybe you get a breather and it pulls back into the 60s. But geez, this is quite a strong stock. You've got 100 and well, they bought Finisar, so that contributed to their revenue growth, 114% year over year. I think if you X out Finisar, it's more like 18% year over year growth, which is still pretty good for this industry. And then you look at the earnings per share growth. 2021 expected to grow 32%. 2022 expected to grow 14%. So, if you don't want to play Apple necessarily, maybe you can take a look at some of the supply chain and consider those stocks as well.
All right. Well, I know that you really wanted to bring up um, an article that we published last week on Free Research Friday. I'll pop the link below, don't worry. And uh, you wrote about seasonality and this thing called the January effect. And so for those who read it, you're aware, so this will be a refresher. But before the January effect, there's also this aptly named Santa Claus Rally. Santa likes to make a visit to the trading floor every year right around Christmas, and oftentimes drops a little gift in a lot of people's portfolios.
That's
So
right. That's right. Santa
I'm
Claus
sure
Rally.
I'm sure there are some individual stocks that are worth targeting around this kind of Santa Claus rally, and then kind of piggybacking off of this January effect, quote unquote, as well.
Right. So the January effect, it's kind of, people get a little bit confused on what it is. I use the Stock Traders Almanac definition. They've been putting out their own research since the 60s for as long as I know. And the way that they define the January effect is the period beginning in the middle of December that can run all the way through springtime, in which small cap stocks outperform large cap stocks. And there's a lot of debate as to why that is. Is it simply that people get more optimistic? Does it have something to do with bonuses and IRA contributions? Does it have to do with tax loss selling and the fact that people sell their losers and then maybe repivot towards smaller cap names in the hopes of making back their money more quickly? For whatever reason, it's something that happens, and it's very common. So, this period, again, beginning in the middle of December, that can stretch out. Usually the bulk of the gains, Joe, are made by mid-February. Small cap gains are made by mid-February. But you can actually, I'm going to share my screen again. And, let's punch up the S&P chart. And you can see the S&P 500 has kind of made very little progress over the course of the last 4 weeks. And we actually were down three consecutive days heading into today. Volume a little bit above average on the first 2 of those days. We're just sort of basing out sideways here. And that's quite a sharp contrast to, if you look at the ETF for the Russell 2000, you can look at the IWM, and you've got that nice steady build out through this whole thing. And it actually began mid-November. So maybe the January effect, people are going to game it, and it's going to, instead of now beginning mid-December, it's going to begin even earlier. But you've got the IWM, or if you want a lower expense ratio option, which I'm always a fan of, you can look at the Vanguard version of that, the V2, VTWO, which again is the Russell 2000. And wow, look at those volume spikes on that chart, Joe. Looks like
Yeah,
some other people like low expense ratio exchange traded funds as well.
like-minded individuals for sure.
Yes. Yeah. So that would be the January effect. So that tells you to tilt a little bit towards small cap stocks. And because sector and industry can have a huge influence on performance, I think the best way to approach that is, if you're not going to buy the index itself, the Russell 2000 index, you could go out and you could then look for stocks in the highest scoring sectors within our research. So you could look at, things like small cap financials, small cap services, small cap consumer goods. Those are all areas to consider as well. The other thing I wanted to talk about was the Santa Claus Rally, because people are like, okay, well, what does the Santa Claus Rally mean? Santa Claus Rally, although this is Christmas week and we're having a lot of individual stocks doing well, you can see that the market, the S&P 500, has kind of been trending sideways. Santa Claus Rally is really defined as the final 5 days and the first 2 days of January. So after the post-Christmas week. So there's, again, theories on why this happens. It could very well be that you have people who did very well this year probably going to use this week to sell and just sit on their hands and enjoy the rest of the year. because they're going to get paid out based on the quarterly performance. And if they've had a good quarter, why risk messing it up in the final week? So they're just, that volume is just going to dry up from them. They're just going to sit on their hands, and they'll come back at the beginning of January. And that's why you get that 2 days probably at the beginning of January, because you have them going back in, the hedge funds and the programmatic investors and those kind of people. Then on the other side of that, you have the chasers, the portfolio managers that maybe didn't do as well, maybe don't own some of these high flying names like a Peloton, don't own those high flying names. And they're going to want to stick those into their portfolios so that when at the end of the quarter, they send out their reports showing all their holdings to their investors are going to look at it and say, okay, they did own Tesla, they own Peloton, maybe I'll give them another year, even though their performance lagged in 2020. So you've got that group. And then you've got, again, the individuals who, because there's less volume, have more of an impact on price direction. They make up more of the demand. So while those other institutions are sitting on their hands, stocks can be more influenced by the demand from those people. So that's the Santa Claus Rally. Now, Joe, the one thing that every listener should know is that if the Santa Claus Rally doesn't happen, usually that's not a good sign. According to the Stock Traders Almanac, if we don't get that rally in the final 5 days and first 2 days of January, then that usually precedes a bear market or an opportunity to buy stocks at much lower prices in the coming year. So if we don't get that strength, I would be a little bit nervous and maybe play a little defense. And then the last indicator, I'm going to throw one bonus indicator at you, Joe. It's called the January barometer. Again, Stock Traders Almanac is something they talk about every year. You can look at January, and oftentimes, if January is up, the year will be up. So you can watch January and see how January plays out, and then maybe make some assumptions whether or not you feel like you want to be 100% invested or not for the rest of the year.
Yep. Yeah, we definitely, we don't want to make any predictions, but we sure love making insights on the show. So I think kind of going off of that, it would be good to highlight a few, just, your typical smattering of high scoring stocks that you believe will perform well, either from the potential post-Christmas rally or in the month of January. So are those, first off, are those different batches of stocks, or is it the same basket?
Slightly different, maybe. We always talk and wrestle a little bit about time horizon, right? I mean, because you've got short-term traders who maybe are holding these things for hours to days. Then you got position traders who are maybe holding these things from weeks to a few months. And then you've got the longer term crowd, which is holding things for a year or even more. So you almost have to identify each of these stocks in those ways and see which one of those check mark, which of those boxes. And then when you're planning your strategy for the stock, kind of keep that in mind. So for example, let's look at Peloton. I think Peloton's not a bad one because Peloton had some news this past week. Peloton obviously buying Precor, which is another fitness company that works basically. If you go into a hotel gym, which no one's doing right now, but if you go to a hotel gym, you're going to see a lot of course, equipment in there. And, doing this buy, it's going to add a few $100 million in revenue. Probably it's going to improve their capacity for production, because one of the complaints about Peloton has been that it takes too long once you order it. How many sales are they losing from people who say want the immediate gratification of being able to get it? Maybe this resolves some of their supply chain issues in that regard. It helps with their cost structure because, you eliminate some of the costs by combining the two companies. One of the things that's interesting, Joe, and you'll see this play out sometimes with very high growth companies where growth has been pulled forward by some sort of an outside event, like Peloton. They'll do an acquisition. And it's not being done nefariously, I don't think, but I think it is being done in recognition that the pace of growth may not be able to be maintained, right?
Yep.
So by acquiring another company, you kind of juice your year-over-year numbers. They're still going to be relatively strong because you're adding all this revenue in from this acquisition, right? So people would have to go back and do the pro forma and say, okay, what's the organic growth versus what's the acquisition-related growth, right? anyways, long story short, I think it's a smart move from Peloton to be doing that for that reason. I think investors should just go in with eyes wide open, and understand that one of the reasons they're doing that is because to be able to expand the product lineup and maybe to be able to maintain a relatively high growth rate. So Peloton is a stock that's been one of the year's best performers. And I don't think it's that wide. It's very widely owned on FinTwit, but I think that there probably are a lot of portfolio managers who don't have this in their portfolios because they were, disbelievers of the story and having legs. So you may see that change over the course of the next week. You may see Peloton actually rocket up to new highs into the end of the year. And, maybe it ends up being a beneficiary in January as well, although it's certainly not a small cap stock, with a 47 billion market cap now. So I think that, you look at the big winners list for 2020, Joe, and that's probably going to be the Santa Claus Rally names,
Yep.
the Rokus, the Pelotons, those. And then if you want to drill down even further on that, you would say to yourself, okay, which ones have less shares outstanding, smaller floats, because the best performers with smaller floats are going to be more easily, they could be more impacted by supply and demand. So more demand, right? And they don't have much in the way of supply and shares. So there's a couple different ways you can game that out and play that out. And then the same thing with from January, maybe taking a look at some of these companies that are high scoring in our research that have smaller shares outstanding or share floats. Don't look at the shares outstanding, look at the number of shares that float. And if they have small floats and they're small cap stock scoring well in our research, maybe you want to consider those.
All right. So I guess that is probably a good place to leave it for this week, our kind of maybe a bit abridged holiday episode. I guess I'll just open it up to you if there's any kind of parting words of wisdom besides obviously happy holidays and stay healthy and safe and all of that.
No, I echo that, Joe. I echo that. I'm sure you're going to go out and be safe on the slopes.
Right.
Over the course of the next couple of days on your nice time up there. And I hope that everybody who's listening and watching us is had a good year and has a very healthy, happy, and safe holiday season. And we'll be back again. We appreciate your support over the course of the last couple months as we launched the podcast. So thank you for that. And of course, if you have any questions, want us to cover anything in the show as we get into the new year, please make sure you let us know in the comments or on Twitter.
Absolutely. Have a very happy, safe, healthy holiday, everybody. Don't let your guard down. Put your helmet on if you're going skiing. That's all I've got to say. Happy holidays, everybody.